And we're live in 10.
Okay, hello everyone. How's everyone doing? Dan the man. How's the hair looking? Okay, the pearly whites looking good? Dan, let me tell you, I'm feeling pretty good. I put all of my money, 100% of my life savings, into a stock called E Corp. Everyone's saying it's the next Microsoft. I'm just gonna say I'll be retired pretty soon, probably, Dan.
And we're
Okay,
live
everyone.
in 3,
Break
2,
a leg.
1.
And we have breaking news this afternoon. E Corp, a stock that everyone's been saying is the next Microsoft, has gone to zero and is now bankrupt. I am so screwed. Okay, so I was a financial advisor for more than 8 years, and I got to tell you, one of the great things about index fund investing is that you're never gonna get a stock like an E Corp. You're never gonna have a situation where you go out and you buy a stock, you put all your money into it, and suddenly that stock goes to zero. Because when you invest in index funds, you invest in a super diversified portfolio. Is a question for you. There's over 450 different index funds in the United States. So how do you pick which one you want? So before we make our decision here, we have to understand what an index fund actually is and the different types that there are. So give me 1 second, I'm gonna get something. Okay, here I have the entire United States total stock market index fund. Are you confused? Let me explain real quick. So inside of here are coffee beans. You guessed it. So each of these coffee beans actually represents a single stock. And so there are 3,015 different coffee beans inside of this jar, which means that this is a total stock market index fund because it's investing in every single stock inside the United States. So what if you invested in this index fund 20 years ago? What would your money be worth today? So this particular index fund, the total stock market, you invested in all the stocks inside the United States of America 20 years ago. This is worth around 571% more than what you bought it for. Now you might be saying to yourself, okay, well, is that a good rate of return? I mean, is that a lot of money? Well, think about it like this. $10,000 invested 20 years ago would be worth around $67,000 today. That's a great return. That's about a 10% rate of return by buying this and holding it over 20 years, not doing anything. Okay, let's say instead of buying like all the stocks that trade in the stock market in the US, what if we just bought the largest 500 companies? You're gonna get like Facebook, Apple, you're gonna get Google, which is called Alphabet, you're gonna get Starbucks, you're gonna get all of these different stocks, all the largest companies that you've heard of before, you're gonna get all of those. So hold on 1 second. Okay, here, this is the S&P 500 index. This is the largest 500 stocks that trade inside the United States of America. You're gonna buy every single one of these in this index fund. So this is gonna be a bit different than this one. This has less stocks. So now I know what you're gonna ask, right? Did this one also have a good rate of return? Well, okay, here's the deal. You know this had about a $67,000 is what $10,000 grew to over 20 years. This one, it grew to about $64,000. So a very similar amount of money, really, over a 20-year period of time, a little bit less than this one did, but still a great rate of return, almost a 10% rate of return over a 20-year period. And you had less stocks, but still it's very diversified. There's 500 different companies. Next question. What if you don't want just stocks? So what if you also want, let's say, some bonds? So if you want to have a portfolio with bonds in it as well, there are bond index funds. Why would you go with bonds? Well, bonds tend to have less risk than stocks. So they might lose less value in terms of, let's say, if this goes down 20%, maybe a bond fund will go down 10%, right? So it's gonna go down less, but likely it's also gonna go up less. So you're not gonna make as much money. So here, this is a bond index fund. This bond index fund has over 8,600 different bonds inside it. It's huge. Now, I already know what you're gonna ask, right? What does this grow to over 20 years if you invest $10,000? So unfortunately, this only grew to $18,000 if you invested 10 grand 20 years ago. That's just around, an 80-ish% rate of return over the time period. And it's about a 3% annual rate of return, so not great. Obviously, you made a lot more money if you had invested, for example, in this one, right? So this made a lot more money, or if you invest in the total stock market index fund, you made a lot more money. All right, so in order to start index fund investing, there are some more things we probably want to know. So first off, are these expensive? How much do they cost you, right? That's an important factor we probably want to consider. We also want to consider tax advantaged accounts, how are IRAs working, or how do Roth IRAs work? We're going to talk about that. And I'm also going to give you examples of different types of ticker symbols, which each of these different index funds. So we're going to go over all this stuff. But first off, tax advantaged accounts. So I'm going to take this and we're going to go over to the IRA area and I'm going to show you how that works. Okay, so here we have two different accounts. We have an IRA over here. We have a Roth IRA over here, as you can see. Now, a lot of people I feel like get confused about these two things, so I feel like a visualization here is going to help us. We have our total market index fund here, so we're going to put this in one of these in a second. But the question is, why would you go with one of these? So each of them have its own basically benefit that you can benefit from by having one of these two things. So I'm going to show you how that works. So for example, let's say I want to go with an IRA. Well, the most I can put in the IRA if I'm under 50 years old is $6,500. So I'm going to put $6,500 into this IRA. Okay, $6,500 is going inside this IRA. Okay, so the benefit of having this IRA, the $6,500 in here now is I get to take a tax deduction. I don't have to pay taxes on the $6,500 I just put in here. Now, where does this part come in? So the thing is, first you have to fund it, which we just did, and then we can buy this. So we're gonna assume that this is already in here. It's an option, right? And boom. So now we're going to buy this index fund inside of our IRA. Now, one of the caveats here is that you can't take money out of this until you're age 59 and a half. You have to pay a penalty. Now, on top of this, when you do take the money out, as long as I'm 59 and a half, then I don't have to pay a penalty, but I do now have to pay tax. So let's say I sell this index fund, I don't have it anymore, right? But I take this money out, well, I'm gonna have to pay tax on this money because I took it out of an IRA. So some of this money is gonna go to Uncle Sam, right? I'm gonna give it to Uncle Sam, and I have this money left over. So that's my income taxes I'm gonna pay on this month. So let's now say instead of the IRA, we wanna go with the Roth IRA. So now I'm gonna take my $6,500 and I'm going to put it into this one. So now we got money in here. So what do I get out of having money in here? So what I don't get is a tax deduction. I don't get to take a tax deduction of the $6,500 like I did here. I don't get that here. But I do get some advantages. So first off, this grows tax-free. So now let's say when I'm 59 and a half years old and I want to take this money out, guess what? I go to get the money. I don't know, let's say this thing grew to $6,500, grows to $50,000, right? I don't have to pay any tax on that. But here I had to pay income tax. But you know, there are little things, little details that you want to know. By the way, there also is a Roth 401k at your workplace potentially, or Roth 403b. Depends where you work, so you may have an option for that. So again, remember, you have to fund one of these accounts, then you can buy your index fund when it's funded already, and you can keep the index fund inside one of these accounts if that's what you want to do. By the way, there is another account. I don't have it here, but I know, let's say it's here, right? It's just a general brokerage account, a taxable account. So, but you will just have to pay some capital gains taxes, was what they call them. But generally speaking, you might pay 15% when you sell a index fund inside a brokerage account. Also, anything like dividends or interest that comes out will also be taxable every year. Right? You don't have to be 59 and a half years old to take money out. So it's more liquid. You can get to the money easier. That's one of the advantages of this. Depends on you and your financial situation. Talk to an accountant. So here we go. We're going to talk about these different types of index funds. I'm going to give you different options for each of these types. So first off, we have this one. Total Market Index Fund. So our first index fund is SWTSX. This is a Charles Schwab index fund. If you buy this index fund, if you purchased it for $10,000 worth, let's say you invested $10,000 into this fund, well, you would have a yield of 1.39%. So you make $139 every year in basically in dividends that this thing spits off. So the fee for this is super low, 0.03%. So you're only paying about $3 for every $10,000 invested. So it's dirt cheap. However, the Cheapest of these is going to be FZROX, which is a Fidelity index fund. And the interesting thing about this, there's zero fee. So instead of paying $3 for $10,000, you're paying nothing. So Fidelity actually has these zero funds, and that's an option for you if you want. Now, in order to get that, you have to have a Fidelity account, which, by the way, link in the description below if you want to figure out which brokerage you want to go with. I have a good comparison between Schwab and Fidelity. You're probably going to want to watch that. And the yield for this index fund is actually going to be 1.84%. So $184 if you invest 10 grand. Our next one, we have Vanguard's VTSAX, so 0.04%, and there is a thing where you have to have at least $3,000 to invest. And the yield on this, by the way, is 1.51%, so $151 for every $10,000 invested for this. If you want a S&P 500 index fund, we're gonna go with 3 here. So this one, you have another Schwab SWPPX is the ticker symbol for this one. 0.02% is the expense ratio, and it actually yields 1.43%, $143 for every $10,000 invested, paying quarterly. Okay, you can also have the Fidelity Index Fund. So this one's called FNILX. This has a fee of 0, just like the other Fidelity Index Fund. It also has a yield of 1.81%. Again, this only pays annually distributions. Next, we have Vanguard's VFIAX. So that one's got about a 1.5% yield. So $150 for every 10,000 on that one. Same thing, 0.04% expense ratio, $4 for every 10,000 invested. It's dirt cheap. And again, you need $3,000 to invest in that, minimum. Last but not least, we have the bond funds here, so aggregate bond funds. So the first one is SWAGX. This is a Charles Schwab aggregate bond index fund, 0.04%, and it has a yield of 4.18% right now. Next, we have Fidelity FXNAX. So this one is not a Fidelity Zero fund. It's going to be a 0.025% fee, so very cheap. It's going to pay 4.35% yield, and it is going to pay monthly, not like the other ones that were annually, right, with Fidelity. So that one's at least monthly. Then next up we have Vanguard. Vanguard's VBTLX. So this one is going to be a 0.05% expense ratio, a little bit higher than the other ones, and it's got about 4.36% yield for this one. So there you go. Those are 3 options for this one as well. So there you go, you got 3, 6, 9 potential index fund options. Of course, this is not financial advice. Make sure you do your own research and figure out which types of index funds you want for your personal risk tolerance. And I do recommend you take a risk tolerance questionnaire or something like that, so you do figure out what type of risk you should be taking. I will try to find a risk tolerance questionnaire to put inside the description below. But if you really want to know how to potentially become a millionaire by investing in index funds with only 3 funds, you probably want to watch this video right here.